Wherever you are around the world, I welcome you to AE Accounting Tutorials. We are continuing our series on partnership accounts, but this time we are going to look at a question on admission of a new partner. But before we look at the question or we solve the question, I would like to introduce you to the concept of admission of a new partner. When we talk of admission of a new partner, it is a situation where the existing partnership firm decided to admit a new partner to either replace a retired partner, a deaf partner, or to increase the membership of their partnership business. Is that okay? And because of admission of new partners, it may also lead to the changes in the profit and loss sharing ratio of the partners. And it may also lead to the valuation of the firm's goodwill, as well as the revaluation of the firm's assets and liability. So I also tackle the concept of goodwill, that is the accounting entry for goodwill for admission of a new partner, and how we value or the revaluation of assets and liabilities when it comes to admission of a new partner. So let's consider goodwill, that is how we account for goodwill. But before that, this question we are taking, it is they admit the partner at the beginning of the year. Is that okay? So when we admit a partner at the beginning or at the year, the treatment is equally the same. But for professional level, sometimes they set questions where they admit partners at the middle of the year or within the year. Here, we consider fractional policies in solving such questions. And in our subsequent video, you'll be looking at all those things. So your work here is just to subscribe to my channel so that anytime I upload all those videos, you will get notified. But don't forget to turn on the notification bell as well. The more you subscribe to our channel, the more you give us more confidence to deliver to you people. Thank you. So as I was talking about the goodwill, the concept of goodwill. Goodwill is an intangible asset which represents all the other factors that enable business to run successfully. This goodwill may be in the form of good customer relation, reputation, and other things. Is that okay? So when we talk of goodwill, goodwill is valued in two different ways. We can internally value goodwill, okay, or we purchase goodwill, or purchase goodwill. Is that okay? So internally valued goodwill. With the internally valued goodwill, this is a situation where the business they themselves sit down to value the goodwill themselves based on a particular method of valuing goodwill. We have several methods of valuing goodwill. I'll dedicate another time to make a videos on that. So when the business internally value the goodwill themselves. So when we talk of purchase goodwill, sometimes when we buy business, goodwill is being included on the value of the business. Okay, so when we purchase business and the value of goodwill is being included, we call it a purchase goodwill. Is that okay? So the business value itself, or the purchase consideration, it is the summation of the net identifiable asset of a business and that of the goodwill. Is that okay? So the goodwill, the purchase goodwill, it is the excess of the purchase consideration over the net identifiable asset. Is that okay? So when we buy business, let's say the net asset of a business, the net asset of a business is 100 million cedis. Is that okay? And we bought, the net asset of the business is 100 million, and the purchase consideration is 150 million, and there was a goodwill. The net asset itself is 100 million, but the purchase consideration or the business value itself, or the amount of money we paid for the business is 150 million. The extra 50 million we paid is what we call the goodwill. Is that okay? So the summation of the goodwill and the net asset give us the purchase consideration. So this is how the purchase goodwills look like. Is that okay? So let's look at how we account for goodwill. Is that okay? We have two scenarios. Sometimes the question will tell you to maintain goodwill in the book. That is, goodwill supposed to have a closing balance. Is that okay? That is, goodwill supposed to appear in the final statement of financial position. But in a question where the question says goodwill is not to be maintained in the book, that is, we should de-recognize goodwill. Is that okay? With this, goodwill shouldn't have any carrying amount. There shouldn't be any closing balance for goodwill, and the goodwill is not going to appear in the statement of financial position. This means that the going concern concept of the goodwill has been ceased. Is that okay? So we are going to look at the entry when we take a question. But this question we are going to take, they say that goodwill is not supposed to be maintained in the book. Is that okay? So we are going to look at its accounting treatment. So let me introduce you to the revaluation. So revaluation account. This revaluation account, we prepare this account to ascertain the net profit or loss or revaluation. Is that okay? I told you on admission we revalue our asset and liability. So when we revalue the asset and liability, the surplus or the revaluation surplus or revaluation deficit is ascertained from this account. That is the profit or revaluation or loss. So when there is a profit or revaluation, we debit the revaluation account and transfer that to the capital account as credit entry. And anytime there is a deficit on revaluation, we credit revaluation and debit the capital account of the partners to reduce their capital account balances. Is that okay? So with the revaluation, anytime there is an increase in value of assets, the difference we credit revaluation account. And anytime there is a decrease in value of assets, the difference we debit revaluation account. Okay, this is what we mean. So let's say we have an asset being a motor vehicle. Okay, let me bring this here. We have a motor vehicle. So the initial balance of the motor vehicle is, let's say, 4,000. That's the initial balance. And there was a present value being 6,000. This means the asset has increased from 4,000 to 6,000. The difference is 2,000. And this difference, because there has been an increase in value, we are saying that we credit revaluation account. The reason is that asset has a debit balance. So the balance brought down initially was 4,000 this week, and there has been an increase. We want the present value to be 6,000. So the increase in value, which is 2,000, we name it revaluation. Okay, so that the total will be 6,000. So that we have the carry down being 6,000, the brought down will also be 6,000, being the carry amount, or the brought down will be the same as the present value. Okay, so this difference that we use to make the adjustment to show the increase in value of assets, because we are debiting motor vehicle account, in revaluation we are going to credit motor vehicle an amount of 2,000. So we don't use the initial value nor the present value, but rather the difference. So you can see why anytime there is an increase in value of an asset, we credit revaluation. The opposite is also the same. That is when there is a fall in value of assets. In that sense, what we are going to do is that a fall in value means we are going to reduce the value of the asset. So we are going to credit the asset account and debit revaluation. So in the case of liabilities, let's consider creditors. Okay, so what we are saying is that Anytime there is an increase in value of liability, we debit revaluation. Anytime there is a fall in value of liability, we credit revaluation account with a difference. Is that okay? So let's also consider that the initial balance of the creditors balance was, let's say, 3,000, and the present value now become, let's say, 7,000. So to increase this to 7,000, we need to credit this account with a difference of 4,000. So we name the difference being revaluation. Is that okay? So that at the end of the period, so the current amount here will be 4,000. Sorry, the current amount will be 7,000. So that the drawdown will also be 7,000. So that the present value will be the same as the drawdown. So this difference we use to make this entry be revaluation, because it has been found at the credit side of creditors account. We come here and say creditors that is the corresponding entry being 4,000. So anytime there is an increase in value of a liability, the difference will debit revaluation. The opposite to when there is an a decrease in value of liability, the difference will credit revaluation. Is that okay? And anytime there is an expenses on the revaluation of the asset and liability, we debit the revaluation account. Is that okay? And after preparing the account, if we ascertain profit on the revaluation, we debit the revaluation account and credit the partner's capital account because it is a profit. That is revaluation surplus. When we ascertain loss, that is revaluation deficit, it will be credited to revaluation account and debit partner's capital account to reduce their capital balances. Is that okay? So these are basically the concepts. But I told you this question we are taking here, the admission is being done at the beginning of the financial year. It's the same as at the close of the financial year. Is that okay? So with this, preparation is quite simple. That is what we are going to do. But remember that in a higher level, they can give you a question where the admission will be done within the year. That is at the middle or within the year. Its accounting treatment is quite tedious because we'll be considering fractional policies in determining their values. Is that okay? So just subscribe to the channel so that when we begin uploading, you get notified.